Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Hope you're having a good day. Everything is good with you. This is the Closing Beats, our quick stock market update show that we do every day, besides Friday. Wasn't here on Friday, and I didn't jinx the market, so everything was good there. Saw it was kind of a flat day, didn't miss out on anything. But today we're going to talk about the stock markets, the good, the bad, and the ugly, everything going on out there with the stock markets today. Kind of an interesting day, really exciting day, by the way, and I've got a lot to share with you, some kind of geeky stuff, interesting things that are maybe coming up that I could teach you, right? So we're teaching advisors here at Jazz Wealth. Hope you check us out at the website, jazzwealth.com. If you need a financial advisor or you're working with somebody and they're just not teaching you, well, shame on them. Maybe you'll consider us here at Jazz. Let's talk about the stock market because I've got a lot to cover and a lot of really good stuff today. Let's take a look. Very interesting day because you had no move in tech, right? It was one of those days where, hey, there's other things to trade. There's things that we can look at. So I always love that because we can broaden our horizons a little bit, look at other stocks besides Apple or Microsoft or whatever. And so you see the Dow was up 1% today, but you see the S&P was only up 1/3%. It was kind of just a slightly above average day for the S&P, but a really nice day for the Dow. So it makes it seem like the markets really did a whole lot more than they really did. Bit of a disconnect there. So we'll go over that. You got the NASDAQ down just a little bit on the day and the Russell 2000 killing it. By the way, in your 401k, small caps are what's driving your growth. If you're looking in the 401ks right now, your large cap growth, large cap value, and large cap index, all just kind of flatlining, not doing a whole lot recently, just in the last week or so. Small cap value is where it's at. I mean, just a killer. Over the last month, it is by far the best performing in your 401k, if you happen to be taking a look there. So that's good to see. Russell 2000 also higher as well. We'll expand on that a little bit here later. Today, like I said, the name of the game was moving over to more cyclical names, meaning more names that tend to move up with the economy and move down with the economy. People willing to take risk, right? So we're moving into things that were previously thought as maybe in trouble or discounted or whatever. The S&P 500 is now officially 1%, a little less than 1% away from getting to all-time highs. The NASDAQ has been there and continues to be there. Broke a streak, though, only 30 to 33 days of hitting new all-time highs. That breaks the streak there that's happened. Anyways, money moving out. If we look at the NASDAQ here, money moving out of those tech names, they're all overbought. That's what we're focused on in the research section there. People are now starting to say, well, where do I go now, right? I've been looking at AMD. I've been looking at, the Microsoft and the Facebooks and all of those, and I've gotten so used to looking at a few names. Now what do I do? Because I see money's coming out. You got to make that decision. Are you sticking with it through a pullback, or are you going to be forced into doing something else with your money? A lot of these stocks have had monster gains, by the way, so very normal for them to pull back, but it means your performance could start to suffer if you don't have other exposure out there. So I've been answering that question quite a bit for customers out there, and I hope you see it. Russell 2000. Last week we focused on, hey, the Russell 2000's waking up in the research center. We posted a bunch of different stocks, ones that aren't extended already. The average performance of all of those stocks actually is 4.4%, which is beating the overall index right now. So a good group of stocks for you to go take a look at if you like the Russell 2000. In this index today was a broad rally. Industrials, healthcare, financials led the way. Tech was the only part of the Russell 2000 that did not participate today, as it pretty much did with the rest of the indices out there. No participation there. If you take a look at the Dow, that's your standout performer here today. Broad rally across the board. Looks good. I have nothing bad to say about today's rally there. The Boeing, all good? Yeah. Oh, okay. Just make sure. Boeing, no problem. Something's wrong. I just want to know. We got a good streak going here where this is all kind of working. So you got Boeing was one of the leaders there, and Caterpillar led the way. From our class last week, our wine and wealth class for our customers now know that today about 110 points from the Dow came from those two names. So if you back that out and you got about 250-point rally, it's still a respectable rally overall, but those two stocks today were the leaders overall and pretty much responsible for 1/3 of the overall move there. All right, as for earnings, here's what we got for earnings. That's still going on, earnings season out there. You've got 68% of the companies out there beating on earnings. That's the highest since 2009, just after coming out from the financial crisis there. That's good, right? A lot of people like that. That's, of course, I mean, who's complaining? That looks good there. You got 63% of the companies beating on revenues or sales. That's not a record, but still the highest in the beating the 5-year average. So 63% is where we're at now. 5-year average, 56%. So we're doing better there. Earnings season, much, much better than expected for any index, whatever you're looking at, right? Just stocks in general. That accounts for everything, not just looking at, the S&P 500 or something like that. 18.6% of the companies out there have raise their guidance versus lowering it. So every stock that's reported, if they offered guidance, we check to see did they raise it or did they lower it. 18.6% more companies raising guidance than lowering it. That is the highest number, or highest percentage, the highest spread, we should say, given all the data that we have. We can go back to almost the year 2000. We have never seen a number that high, which sounds odd, but that's currently where we're at. So guidance being the big focus here. Super crazy that that's going on. It's allowing people now to go look at other stocks. If you're out there not looking at other stocks besides those tech names you've been writing, you're about to be in maybe a little bit of trouble there. So just keep an eye on that. Hey, this week for our FinTips videos, we're taking a little bit of a break, playing around with some things. So no FinTips videos. We'll be here every day though to do the dose show or to do the closing beat. Wine and Wealth, possibly going to be a public one this week, talking about retirement, getting close to retirement, and how do you play that game of which dollars go where. I've got a great way to explain that. So I don't mean to tease it, but I think we're going to just do it as a public, open to everybody sort of thing. And then our research site, you got to check that out. We're focused on overbought stocks this week. So we've got a list coming up. I'm going to share some of the list with you. We've got a post coming up here in about 30 minutes where we're showing all the overbought stocks relative to their valuation as well. So you can really kind of a cool layout that we did there. So you can get your mind right. If you own some of these stocks and they're overbought, just know that. If you start to see it fall, it's supposed to, right? It's not that anything maybe is wrong or there's anything that you should be scared of. Just know that that's probably the case there. All right, let's go over to our sector breakdown because I want to get through this. So many cool things. Today was the day where we had basically everything but tech. Everything but tech and communication services. If we go over to the XLK, that's your tech sector ETF. It was weak today. You had Microsoft, one of the weaker ones that was pulling you back on that decline. All your big runners pulled back too. Your PayPal, obviously a great runner. AMD, very extended, all pulling back. These stocks like to pull back. I've mentioned that all the way up here, mentioning this on the way down as well, so I don't say, I told you so. Communication services pulling back as well. Basically, every FANG stock besides Apple was down today, so kind of okay there in terms of a pullback. I'll go over to, where are we at here? Oh, there we go. I'll go over to energy. That was your best performer today, up 3%. Industrial is also the leader. Oil led energy today. You had some global news going on over the weekend. So you've got oil, and of course, from a technical perspective, that's that breakdown reversal. So a lot of cool things happening in energy, happening over in the price of oil as well. Industrial's waking up, right? Talked about this last week before the breakout. I like to be the guy that tells you ahead of time instead of I told you so. That's my biggest phrase there I like to share. Well, over the last 4 days, of course, it's broke out. It's looking better. Gave you a whole list of stocks that were already performing well and not weak in that sector. So looking good there. Got a big boost today from Boeing. That continued recovery from Boeing, up 5% again. Up over 15% just in the last few days there. So that looking good. You also had FedEx just blasting off. That was one of the stocks on the list I gave you last week, just before that, I think. Up 9% on the day. Got a number of different upgrades. UPS going along for the ride. Very extended. Careful. Very, very, very extended here. Number of upgrades today. Up 10% in just the last 2 days. So interesting there. And Caterpillar, we already mentioned, but in the industrials, Caterpillar, one of the leaders as well. 5.25% gain all in one day. The stock doesn't normally do that, so that is called sector rotation. Consumer discretionary stocks, for once, not higher because of Amazon. Actually, Amazon today was the biggest drag on this sector. It didn't fall a lot, it was just the biggest drag. You got names like Nike breaking out to new highs, looking good. We'll come back to that in a minute. Home Depot looking good as well. People willing to take risk, even going into the gaming stocks, your casinos. Las Vegas Sands in the mix there. MGM back to the 200-day moving average. And Royal Caribbean. Royal Caribbean lost way more than expected. $6.13 a share versus $4.55 expected. People willing to take risk today. Money is rotating. That's the best way I can say that. If you are not rotating, you are slowly left behind. Gold was up $11, I think, on the day, up to $20.39 an ounce. Now up over 25% from its 200-day moving average. And that takes us to a quick lesson here. I'll back that out. We're going to go over to a little something here. We're going to look at gold versus the 200-day. So here is an interesting way to show this, right? Quick lesson. You've got gold as a ratio compared to its 200-day. Basically, I'm saying the higher this is, the further we are away from the 200-day moving average, and the 200-day would be indicated by 0 here. So if you're just drawing a straight line, imagine this being the 200-day, how far above or below is the price of the stock? The reason we're doing it this way, we want to see if how far gold gold is anything odd. So you can see that gold is currently about 36% away. How many times does it do that? Well, to do this, we're looking back to about 2005 to give you as much data as we can. Gold does not normally go this far away from the 200-day moving average. This is the data. Takes my opinion out of it, my beliefs, whatever, and it shows that to be this far away is very abnormal. In fact, it's only happened one other time in history. One other time. And to take it a step further, silver is even further away. So this is not normal. If you are buying gold here, know that you are buying into a period of time that does not normally stay at these prices. Doesn't mean it has to fall, as I'll show you in just a second, but it just means that this is not the best price to buy gold. Just assume you missed it. If all your friends are saying, yay, gold, whatever, assume you missed this part of the trade and you're going to let it relax before you come back to it. I can't tell you what to do, but I'm just giving you the lesson, right? That's my fancy way of saying that. Anyways, here's the forward performance of gold. When it does get extended like this, now what I had to do was back down. I just showed you on the previous chart. There's only one other time that I could share that happened. We had to back down our stats a little bit and go further out in time. So we found that there are 6 other times when it finds itself this extended. What I'm trying to show here is that if you look at the average performance, it's technically positive. If you look at the median performance, it's technically positive. Average return is positive except for the 6-month time period here. I don't have it there. This is the only time where it averaged a decline over a 6-month period. Other than that, gold does well when it's this extended. It just happens to pull back quite a bit. So look at over the next 1 week, 1 month, 3 months, you can see it does like to pull back and give you another opportunity. Doesn't mean that gold is bad. Like I said, just means it's extended and it's not a good place to start diving in with a new trade. It's time to maybe put it on a watch list and see if maybe things pull back. Let the dollar recover a little bit. In fact, I'm going to go over to that now. Let's take a look at the dollar so I can maybe give you something a little extra here. I'm going to take this out. We're going to put this guy here. Here is the US dollar in a more unique way. You won't see this anywhere else, these last 2 charts. Just trying to show you a different way to look at it. The dollar down 10% from its highs. What I did here is I changed my chart so that I could show you from any high, pullbacks from highs. What I wanted to see is how often does the dollar pull back 10% from its highs? And if it does, how often does it do it as rapidly as we have gone here? So if I go over to the dollar, just to show you real quick, here's the move in the dollar. I'm using the UUP if you want to take a look at that. It's a dollar ETF. But you can see the rapid pullback. Obviously, it's it's what it is. We've got a lot going on here. But if you look throughout history and you look back, we're just kind of looking back to like 2010 here, the pullback of 10% from its highs really doesn't happen that often. There's one other time it fell even more. So if you've got if you've got the dollar at lows and extended like it normally doesn't like to be, if you assume there's a little bounce there, you now have a recipe for gold to pull back as well. So kind of my geeky lesson, but just know the dollar does not normally fall like this. And your job as an investor, if you're doing this on your own out there, or my job for our clients, is to recognize differences, things that are not normal. Is that period of something happening that's not normal, is that an opportunity, or is it a reason to scale back, or is it a reason to maybe sit on the sidelines a little bit or something? So very much wanted to point that out to you today because you've got a lot of stuff out there right now that's abnormal. And like I said, in the research section, we're going to actually talk about we all week we're going to be talking about extended stocks, things that are currently abnormal. Anyways, let's move on. New highs, new lows for the day here so we can get on to some more good stuff. 38 new highs on the day. Industrials and discretionary stocks or cyclical stocks, they killed it, right? Everything cyclical was higher today. Almost 75% of the new highs list today was in one of those categories. Again, sector rotation. Spot it. Be able to spot that. You'll be one step ahead every time there. A couple stocks I want to point out that are on that list. United Rentals, recent breakout, looking strong. Maybe one for a watch list to keep your eye on. I mentioned Nike just a minute ago. That one also breaking out. We talked about this in the past with kind of drawing out that little break of the downtrend here. I can get rid of that now. Moving to new highs, new breakout, well above average volume, something you may want to pay attention to there as well. Rockwell. This one getting back to those highs as well, hinting at a breakout, volume increasing, right? So it's showing you people are moving to this area. So far, no breakout just yet, but I thought that was interesting because maybe something that's coming up soon. Whirlpool's a beast. We own this one. We're happy with this one. Continues to move to new highs. Not this, the stock you wouldn't think would have done it, but it did it. And then Carrier, new highs. This is also a beast, just continuing that spin-off. You got Otis and Carrier. Carrier doing better, but all in all, looking really good there. Okay, let's get over to the watch list here and talk about some interesting things today. All right, what we're looking for on our watch list is overbought and oversold stocks, but what we want to do is consider their valuation. So what we wanted was to find the most overbought stocks, the most oversold stocks, but we wanted to see where they were value-wise. Like, are they overbought, but they're still a good value? Meaning if they pull back, you might be interested. Are they oversold and expensive? So you wouldn't consider trying to pick on those because they're expensive. And so that's the kind of thing we're trying to take a look at here today. So what I'm going to do is go through a couple of these for you. You can see the list on your side there. I'll give you an example. You've got AMD. So AMD, we could all agree, is probably overbought in the short term there. It is also trading at 160 PE going forward. So at this point, it was over 42% away from its 50-day moving average. Not normal, doesn't happen. And also way higher in terms of being valued relative to its sector, right? 160 PE, that is crazy. So you're looking at a stock like that and you're saying, okay, if it pulls back, still going to be overvalued. I'm assuming operational excellence going forward, and that Intel continues to, delay or struggle or whatever, if you're going to be looking to buy this stock on a pullback there. We'll go over to Etsy. Oops. So Etsy's done well, pulled back just a little bit here today, not too big of a deal overall. I'm trying to find my list there. There you go. So Etsy, about 33% away from its 50-day moving average there, trading at 110 PE. In fact, most names that I share with you that are overbought are also quite a bit overpriced. In the research section, if you happen to see the post here coming up in a little bit, if there's a dash in the PE ratio there, it means they don't make a profit. Unfortunately, there are a lot of stocks that are extended that are not profitable companies, and people look at that and they say, well, that was a great ride, but you're not making me a profit, so I need to go put my money elsewhere. You saw a little bit of that here today. Anyways, that's Etsy. Looking at Carvana, great move. I mean, the stock has done really well. This company's really grown quite a bit and rather rapidly there. If we look over there, they don't make a profit, right? 44% away from its 50-day moving average, and it's already starting to pull back. You don't need me to tell you that one's starting to pull back there, but they don't make a profit. Pinterest. If you're looking at Pinterest as well, where did they go? Pinterest was, there you go, 40% away from its 50-day moving average. They don't make a profit either. It's extended on the outlook from the earnings there, so they got a great gap on the forward guidance there, looking pretty good. And now we'll look on the downside. So you look at Intel, this is now part of the oversold list. So Intel went through a little rough patch there with delaying their chip and everything. Up 2.5% today. If you take a look at Intel, you've got a stock that's trading cheap relative to its competitors. And AMD is a great example. Trading at 160 PE, you got an 8 for Intel. So not only is it oversold, but it's also undervalued at this point. Probably a reason why you see people trying to pick off the bottom there just a little bit. If you look at Spirit AeroSystems, I'm not saying this is a good stock, but obviously it's oversold. It's beaten up there a little bit. They've got some troubles. They're not profitable. They're really reliant on Boeing, so you can see it kind of trading. If you look in this last little window here, you can see a very similar pattern to Boeing if you were to follow that. It's because they're really just counting on Boeing getting back up in the mix there. So we'll see. I mean, you wish them well. Western Digital also sold off a little bit higher on the day. I want to find the data for you there, but my little eyes are deceiving me. There you go. Western Digital, 14% below its 50-day moving average. Stocks that are oversold are not as far away as stocks that are overbought. This company is struggling just a little bit, but you can see that move lower on the list. Wanted to share that list with you. The full list of the top 20 and the bottom 20 are going to be posted on our website here, our research site, in just a little bit. I've included the PE ratios as well, the distance from the 50-day, the spread anyways, and maybe some stocks that, like I said, you might own them. You want to look at them and say, I own something that's extended and very much overvalued. Why do I own it? Right? I've got a nice profit. Maybe I should consider taking a profit there. Anyway, so that's that. Let's move on to stocks in the news here. And we'll see if I can take your questions. Stocks in the news. You got Twitter. Twitter talking with TikTok, supposedly looking to merge maybe with TikTok. That's a long shot. You could probably tell by the price performance today. Investors weren't buying it. Microsoft, the clear front runner there. And I don't know what the deal is there, but that's what you got going on. Simon Property Group up 5% on the day. They're working with Amazon to take the Sears and JCPenney locations, possibly turn them into Amazon distribution centers. Not clear if that's going to be like a walk-in distribution center. Or, you know what I mean? Like you go to the mall and you at the food court and then you go to the end of the old JCPenney and you just pick up your Amazon product. I don't know, but that in the discussions there. You got Estee Lauder looking stronger there. Barron's put out a piece this weekend that said the stock should rebound sharply when the impact of the pandemic erases itself, hopefully soon. Stock's up 2% on the day. Kodak, what a wild ride for Kodak. Down 27% on the day. Darn near back where it started. You may remember they announced the deal that they got with the government, the contract, stock shot up higher. We then found out that there was stock awarded to the CEO literally one day before they made the announcement. That was not good. The SEC comes in and says, we're going to investigate that. Today, the White House says, we're going to hold off until the results of the SEC investigation. What a wild ride over just the last couple days there for them. Royal Caribbean up 10% even on the day. Like I said, big loss from earlier. They reported that big loss. Stock's still higher because why? Now you know money is moving from tech into other more cyclical areas of the market. That's probably the biggest lesson of the day if you're paying attention still. Hopefully you got it. And Nikola. I'll point out Nikola real quick. Not on the list, but we'll point that one out. 22% gain on the day. Republic Services, which is RSG, has really been pushing to try to get into a more environmentally conscious kind of a position with their trucks. So they told Nikola, hey, we'll buy 2,500 garbage trucks off of you. And obviously the stock price is moving higher. The issue is now Nikola has to figure out how to make these things, right? They don't even have a factory, right? They've got a great plan, but they have no factory or anything. The stock was higher on that news. You wish them well, but I don't know. They're worth all that money, and they got a contract now, but can they even build them that fast? Will they even be viable? Will they work? It's kind of fun to watch, actually. Anyways, that's what I have for you. I'll take your questions if you happen to have any, and then we'll get the heck out of the way here for you. Big storm coming. Earnings, not really any interesting earnings coming up. You got Dr. Horton paying out 18 cents in dividends, if you care. You've got Canada Goose up 3% on the day. They report earnings tomorrow. That's pretty much it. MDC is paying out, how much? 33 cents? So, yeah, that's pretty much what you got there. Take a look and see what questions you might have, if you have anything. Yeah, are we going to is Black Friday just like canceled? Right? I saw some rumors of that. Yeah. I don't know. I'm not sure about the Nikola thing. It's a fascinating study, really. Yeah. Any other undervalued and oversold stocks like Intel? Yeah, I'll put the list, actually. I think it should be up, if not now, in the next few minutes here. Got to be careful with some of these, because just because a stock is oversold doesn't mean it's cheap. An example of that would be like Valero. Valero oversold a little bit, still very expensive overall, trading at a 20 PE. So doesn't sound like a lot, but compared to the sector. And what we did, by the way, on that PE ratio was to go by the sector. We didn't average out anything else. We just looked at the sector and said, you're trading above or below it. If so, we color-coded it a nice fancy red for you. So hopefully that helps you there. Yep. You want Black Friday to go? Yeah. When does low volume trading pick up? After the holiday, which it may take a little bit longer because schools are typically in session by then, the Labor Day holiday. So it may be a week after this year because, I don't know, people are still at home. I know schools pretty much around the country have delayed at least a week or two. So it could be a slow volume recovery. This could be an interesting year to check that out. Yep. You like U.S. Steel? Well, the general rule is you don't look to start large positions in steel companies during recessions. General rule. I mean, don't take my phrase or whatever. General rule. It's obviously trading sideways there. This would be one where I would argue, because of that, because of where we're at, we don't know like what's going to happen here in the short term. Maybe this is one where you let it bounce a little first, check in on it on a pullback. Maybe it's not one to go crazy there. Yep. You like the idea of Occidental Petroleum again? I mean, it's waking up, but suggesting you buy a stock that really hasn't done much. So it's hard to dive in on that. Maybe a nibble, but it's hard to dive in on something like that. It's not moving. Yeah. Back to Biden and Democrat in November. Not sure what that means. If you think he's going to be the president, we will see. Sure like to see. I've never thought I would like miss a debate. You know what I mean? Let's have a couple debates. Let's do this thing. Get everybody fired up. I love it. Hey, well, I'll wrap it up there. I do appreciate you guys hanging out for the day. We'll be back tomorrow. Do this all over again. We got a lot to cover this week. There's a lot going on, so don't miss a beat. Get it? See what I did? Anyways, have a great rest of your day, and we'll talk to you soon.